Hi everyone, a warm welcome to our program. The topic of our program is role of blockchain. Nowadays, this is a hot topic, and we all know. I, Paras Kumar Arya, I am a chartered accountant practicing in Karnal. I am qualified in November 17. So I welcome first of all the chairman of Karnal branch of ICI to welcome the our eminent speaker as well as all the members who have joined. Sir, up to you.
Thank you, Parasji.
Recording in
Good evening,
progress.
Nanda sir. Good evening, sir.
Good evening, Nanda
Very good
sir.
evening.
Good evening, sir.
Very good evening.
Good evening, sir.
Good evening, Deepak ji. Good evening.
Respected CA Charanjot Singh Nandaji, Central Council Member ICAI, and today's eminent speaker, Mr. Miling Kamath, and my professional colleagues and my members in the committee, and all the participants who have joined this web VCM. Good evening to all of you. It's a matter of great privilege for the Karnal branch of NIRC of ICAI to host the virtual CPE meeting being organized by Committee on Management Accounting of ICAI. ICA Rohit Garg on behalf of Karnal branch of NIRC of ICAI welcomes you all on the today VCM from the core of my heart. I welcome our today's guest speaker Milind Kamatji on behalf of Karnal branch of NIRC of ICAI as well as on behalf of Committee on Management Accounting of ICI. Welcome you, sir. Now, I would like to introduce Mr. Charanjot Singh Nanda, sir. वैसे तो इनको इंट्रोड्यूस कराने की कोई आवश्यकता नहीं है, ये तो एक हमारे आईसीआई के जो हैं बहुत ही आदरणीय मेंबर हैं, but it's my duty, so I'll do it. Mr. Nanda sir is a Central Council member of ICI and currently he is the chairman of internal standard boards of ICI and chairman of Committee on Management Accounting of ICI. Mr. Nanda sir is a vice chairman of Continuing Professional Education Committee of ICI. Apart from chairman and vice chairman of various committee, sir is the member on board of the 26 committees of ICI. Sir is also nominated on the IRDA steering committee for implementation of risk-based capital design. Sir had also represented ICI on SEBI committee on disclosure and accounting standards. Sir had also authored a professional book that is a practical guide on audit of documentation for statutory branch audit. Sir had contributed as a guest speaker at Surrey, Vancouver, British Columbia chapter of ICI on IFRS, effective communication and forensic accounting seminar, and as a guest faculty and program coordinator at various seminars organized by international bodies as well as ICI. At last, I again welcome you all on today's VCM. Over to you, Parasji.
Sir, I request Nanda sir to share some thoughts and as well as welcome Mr. Milind Kamath.
Thank you, Parasji. A very good evening, ladies and gentlemen. I am truly honored to address more than 2,000 people who have joined to go home more enlightened after listening to this webinar. A great initiative from the Committee on Management Accounting and a great response from the membership at large. CA Rohit Garg, the chairman of Karnal branch, CA Deepak Kapoor, the past chairman of Karnal branch, Milind Kamath Saab, the speaker of the day, Paras Kumar, the moderator, and all who have joined here to go home more enlightened, putting at rest all the doubts that may have arisen on the subject. Ladies and gentlemen, I want to very candidly put one thing, that your committee is very passionately trying to do programs every Friday 6 to 8, invariably. And we are keen to have suggestions from you on areas where you want us to hold seminars. We have best of the speakers. Mr. Milind Kamath is a very senior faculty and he has got a deep insight into the subject which he is dwelling. I am very keen to tell you that as the committee, we want to work day and night to ensure that we give our best. I was traveling, I am coming from Amritsar to Delhi and I am near Khanna. So I thought I would step in and wish this webinar a great success. I take this opportunity to welcome Milind Bhai for his very professional talk. I welcome both the chairman and past chairman of Canal Branch, Paras Kumarji, the moderator, and all chartered accountant friends who have joined us to go home or enlightened. Thank you. Thank you so much.
Thank you, Nanda sir.
Balaji, the dice is all yours now.
You are traveling and you have give us the valuable time. So now I am giving a brief introduction of our speaker, Mr. Milind Kamath sir. Good evening, sir.
Good
Hope
evening.
you are fine. Milind sir has 4 decades of experience in information technology services and consulting sector. Milind sir was engaged in setting up of new digital business in cloud, mobile, big data, blockchain, etc. Milind sir has rich experience driving operational excellence, learn management, M&A interaction, and change management. He served for 23 years for Ateos Group, a French giant in IT service. During this period, he successfully performed various leadership roles in sales, marketing, services line, business units, HR, business technologies. In the first decade, he worked in India and was part of main turnkey IT solution developed in the financial sector. Milind sir is very enthusiastic about learning new areas, skills, and domains. Milind sir has completed his executive MBA in leadership and change management from Huddersfield University, UK. He is postgraduate in financial management from JBINS, Mumbai. He has completed his bachelor in electrical engineering from Space, Mumbai. Uh, and he is also right now he is also pursuing his doctoral program in artificial intelligence from University of Bradford, UK. Milinsal presently is a core faculty member in the information management area at SP Jain Institute of Management and Research, Mumbai, and he is teaching at SPIJ from last 3 years. I welcome Milind sir again, and Milind sir, up to you. Thank you.
Thank you, Nandaji. Thank you, Parashi. Other colleagues from Karnal branch, I thank you for giving me an opportunity, and other colleagues and friends who have joined from ICAI. So I will just first, you are able to hear me properly, right? Paras sir, I will keep asking you this question.
Yes,
Yes,
very
yes,
much, very
yes,
much,
yes,
Milind Bhai. You're clearly audible. Please carry on.
yes, sir.
Okay, so I'll just start sharing my presentation. Just a minute. You are able to see the presentation, right?
Yes, sir. Yes, sir. Please go ahead.
Yes, sir. Screen has been
Yeah.
shared.
So what I will cover today, based on, because you are all very distinguished professionals from accounting, I am from other sector. So I deliver a very similar session earlier, and based on interaction, I have modified this session for the Karnal Branch webinar today. First, a quick introduction what I do these days. So partly I was introduced. Then I will also set some context why this particular topic is so important today, and especially for the accounting profession, what is happening, because people keep talking about digital revolution, what it means. Then, since in accounting assets are very important, so what are digital assets and how they are impacting the accounting professions? And as soon as you see about digital asset, there are two important things people keep discussing. One is cryptocurrencies and another is non-fungible tokens. So I'll spend some time what are these two, and especially its impact on the accounting profession. And underlying technology around that is what also mentioned, what is blockchain. So I will also go some detail on blockchain and associated with contracting, because all financial contracts, because we are interparty, and all organizations, and I'm quite sure many of you are practicing CAs, as well as some of you are from corporate. So all of us work in the ecosystem, and we are interparty related transaction is a major chunk of what we do. So contracting is a very important thing, and blockchain also has very interesting thing how to do contracting. It is called smart contract. So I will spend some time on that as well. Then I will just see, because you could be in many different industries. So what are the applications of these in various industries? And then I'll spend time on the accounting profession, how it will get impacted for the future. And I will conclude with video. Since this is becomes monologue, to break the monotony, I will use videos sometimes so that you will hear somebody else talking, also some visuals, so that it will break monotony. So first thing first, as I was introduced, I am at SPJMR, the very premier business school in India, located in Dhari campus. I lead their global management program in Europe and USA. So we take all the young graduates, including a lot of chartered accountants, fresh chartered accountants who join, go to Europe and USA to pursue financial management. I also, as I explained, presently working on my doctoral program with University of Bradford, UK. Keep traveling to UK for completion of that. The rest, I think, you have all been adequately uh, introduced. So coming back to the main topic, I will just set the context. And before I go digital, blockchain, and all, I will just spend some time, 5 minutes, on lessons from the history. And if you see in the history, wherever there was a connectivity, I think economic progress, financial progress was profound. And what the topic what we will discuss today, blockchain, also the success future, what will happen is a large connectivity, and I will come to that point when I touch the blockchain. But if you see the what I'm showing on the chart, this was an Ottoman Empire. If you see why they were so successful in building that empire, because they connected majority of that to the Turkestan to roads. So that roads connectivity, they could move the people, they could move the armory, they could move the defense personnel, and they ruled the world for quite some time. Now you come to the recent age, this is the British Empire. You know, British also ruled the world, and the secret of that particular ruling, if you see, they were all sea routes. They connected to the Britain. So again, movement of the people, movement of the goods, movements of many other types of commodities to Britain. They became very wealthy. But what the secret of that, they connected to the roots. A lot of people talk about industrial revolution. The industrial revolution, if you see, is factories came and they were replaced by the immediately to the factory of steam engine. Because the connectivity, railroad started, economic progress fueled. Now you come to this modern world. You will find there are three things which I have shown. One is the containers. You know, these are containers where I am showing you. These containers are very important because they are modularized, standardized, so that container can go in the sea with the ship. It can come on the road, go on the plane, and you will find the connectivity became profound. And the moment that connectivity came, the East Asia became very profound. Japan progress, Vietnam progress, you know, the clothes of Bangladesh, which became very popular. So the key part of the success and lessons from the history is connectivity. Faster, better, cheaper. If you go in India, many places, Narendra Modi, our distinguished Prime Minister, keep mentioning Bharatmala project. You go to those of you who are from Mumbai or many of the cities, you will find infrastructure building, road connectivity, rail connectivity, metro connectivity, because connectivity is the success behind economic progress. And when we come to digital, this is very important, this particular lesson. That's why I've taken the lessons from the history some interest, because today I will be less technical and saying that what is behind the usage and how we can use this knowledge. India also an aspiration for 1 trillion digital economy by 2025 out of the 5 trillion economy which nation wants to build. Presently we are 200 billion, and majority of that because of the payments. Because if you see that payments, what has happened, you will find most of the people who are on the the MSMEs or work on the roads, all of them have that QR code, and then say वो QR code दिखाते हैं और मोबाइल पे पेमेंट लेते हैं. That is the revolution has happened, but that is only 200 billion. Our transactions still go through the bank. Our transactions still go to the bank. We require a lot of intermediaries, and we'll come to the point If you want to go to the 1 trillion economy, there are many things apart from payments which have happened. So what is digital? If you see, the people keep talking about 1G, 2G, 3G, 4G, 5G. Two things happen. Speed becomes exponential, and the quality of what you can get becomes pretty big. And then of course you can consume different part. We started with voice 1G, and then at time voice used to get dropped. We used to get very frustrated. 2G came, text SMS started. So for those of you remember, that was 2G. Some text messaging came. We were very happy that we could send the message, because postcards were before that text, and now postcard got replaced by text. Then we came 3G. Suddenly we saw data, some pictures started flying. We came 4G, it became video. Now videos, where WhatsApp video every second starts flashing. 5G, you will find autonomous cars and many things. It started in US 2 weeks back. Those of you who track, there are some issues. A lot of aviation experts are saying there is a big risk. A lot of flights got grounded, but that is initial stage. But that things, it is a high speed connectivity, and then it will also make a progress. So the data had changed, I have already explained. But this is to set in context, this digital one, why the blockchains are now important. Out of the total population of close to around 7.3, 54% people live in urban areas, and out of which around 66% of the population is having phone today. I mean, this is first time in history that people are connected to this extent. Okay, and almost 59% is internet users, and this is increasing every day, because most of the governments, sub-Saharan Africa, people are making attempt. Most of these tech giants, we have many difficult conversations about data privacy, what they do, but they are also improving the technology to get these masses connected, not out of love. Of course, they will make business out of it. But you can see how the entire world population is getting connected. This is our social media revolution. So the key point is we are getting all connected, right? There is another thing, those of you are saying who are using smartphones. There is a rat race called, how many cameras we will have on the phone. And that is not for only selfies. Over a period of time, the cameras will do many other things, including scanners. You will have an iris scanner, by which whether you are having diabetic, you will have an heart issues, everything you can load on cloud and flash. The artificial intelligence will tell you what kind of problems you will face, and that is what it will moving to. But that is not the topic of today's discussion. So in conclusion, this is what the power of digital which we see, and I will come in the context of blockchain this part. One is the scale of wireless connectivity. You are saying more than 60% of the world population getting connected. The second is speed, and from India you have seen the Reliance Jio, what a massive penetration and what a commoditization of data it has done, cheap data today. And then there are many things. You have a smartphone in your hand. This is a thing I hope you are able to read. This is Apollo 1, the space shuttle which took first time a man on moon. Today the smartphone you held in your hand is 1,300 times more powerful than that space shuttle computer which took man and moon. So you can see the evolution of computing. Okay, and there are many technologies which come, but this is all power of connectivity, and we need to we are making progress, but still some progress is remaining. So the first thing happened was this internet of people. We got connected, we became social media, Facebook, all that thing has happened in the first wave between 2008, as soon as that smartphone came. Within 4 or 5 years, Airbnb, we love all those facilities. Then a lot of things started getting connected, and it is called Internet of Things. So smart cities, it came, big data came, all that thing is happened. But all in spite of all that development, some of the challenges which I listed, and you are from an accounting profession, so you will realize this. Paperless and online we keep mentioning, but government paper today, government money today is with paper. And I have mentioned that Khan's picture here. RBI and commercial banks spend 21,000 crore on currency management in our country. 21,000 crores per annum we spend for currency management in the country. Okay. So in spite of all this digital halabulla, you can see this is what we spend. I mean, the expenditure we have for managing currency. We still have intermediary for establishing trust. Without bank account, you cannot do a financial transaction. Of course, there are many other black money related things. I won't go into that. Be aware, Paytm, Google, all of them today require bank. You go through the bank. The merchant account on one side and your account on other side, or between two parties. There are two banks involved in that. Contract management, which all of you are familiar, still is paper oriented. Payment delays, disputes. Cross-border payments are, I mean, even though they are improved, but still it is full of intermediaries and they charge huge commissions even today. Despite connectivity, we still need agencies to verify our employment records, criminal records, traceability of the batch of medicines to track counterfeits, duplicates. Despite connectivity, accounting profession loves reconciliation. We are not able to get rid of that concept called reconciliation, and we spend days, nights attaching the accounts and so many things which we keep doing. There is the other side, piracy, copyright violations, intellectual property rights. These are still, we don't have a proper solution in spite of this connectivity and what we have discussed so far. Music artists, painters, many other artists still depend upon intermediary to monetize their work. They don't have a way to monetize their work because the moment it is in public domain, you don't know who is copying. Okay, this is the other side of connectivity. We still need manual verification and confirmation at the end of the year from creditors and debtors for their balances for closing the accounts. And I think you are all familiar with this particular problem. In spite of automation, digitization, accounting frauds still grab headlines, misrepresentations of the frauds still we have common in India. We have still in last 3 years, in spite of all this artificial intelligence, etc., PNB scam went up. Yes, bank scam. I mean, there are many things which are still keep going in spite of the progress of computerization, which I mentioned. So all the above challenges, if they are related to exchange of value, because presently what I've discussed so far is information exchange. Value exchange is what these problems create. So what is the way out? So a revolution is coming. Some of you may have seen. It is called Internet of Value. It is just emerging. That how it will this Internet of Value comes, because how you can transact on Internet with value, whether it is lending, whether it is securities, trade finance, capital markets, how this can be done is what I think the next revolution of Internet will be there, and it is called Internet of Value. So the first revolution of digital transformation, that is Internet of People, because all people got connected. Second thing, things got connected. You know, we can have a lot of these sensors, you have a lot of smart watches, so things got connected. And I think that era has been behind us. This is the era which is now taking shape, that how do you transact a value on Internet. And this problem which I mentioned are related to transacting value. So today's trends, if you see, the blockchain hits because of that particular thing, that how do you have these issues solved. These issues solved, blockchain is in the headlines of many places, many countries, and top of that is the first thing called cryptocurrencies. Because blockchain has got popularized because cryptocurrencies. But I want to make one distinction very clear. Cryptocurrency is not blockchain, and blockchain is not cryptocurrency. Cryptocurrencies uses a technology called blockchain. I'm taking a minute here to explain to all my audiences that cryptocurrencies is not blockchain. Cryptocurrencies use a technology called blockchain. Please remember that. Otherwise, people use the word interchangeably. The cryptocurrency is blockchain. It is not. So the key takeaway from this particular slide, that cryptocurrency is not a blockchain. So first is cryptocurrency. Then second thing, you will find at conversation at many tables is non-fungible tokens. That means if you take a cryptocurrency, I mean, one Bitcoin or is equal to so many, and there are a lot of interchangeable values. But I cannot say that certificate have 5 components: certificate of authority, proof of ownership. That is one. You cannot break into 5 components like cryptocurrencies. So there are many tokens getting issued, and we'll come to that. What are the accounting problems it poses because of that? And third is immutable record keeping, because all the frauds which I mentioned is either manual error. I mean, we are all human beings, we can make an error. That is first part. Or the second part, genuinely somebody wants to misrepresent. I mean, any one of them could be true, but the end result is that there are leakages or misrepresentations, and either there are errors or people misunderstand. So there is a third component saying immutable record keeping. So if you see in the context of blockchain, these 3 things keeps mentioning. So I've taken first thing that cryptocurrency is not blockchain, but cryptocurrency uses blockchain. Yeah, NFT is not blockchain. NFT stands for non-fungible tokens. So that is a second assets, but they are not currencies. And third, it is a record keeping system, the way you are using double entry record keeping system. But double entry record keeping system has, you can change it. Some people can erase it. You will can change the timestamp, and majority of those issues which I mentioned is because it is possible to change. So the third area is immutable record keeping. That means once you record, you cannot change. So these are the 3 things mentioned, and I will try to start explaining each one of them. So the first thing first, what are digital currencies or asset? Because currencies are asset, and at least in physical form, you will find when Notebandi happened, a lot of currency came out of this country. So people love currencies for whatever reasons they have. But what are digital currencies and how they will impact accounting profession? So as I mentioned, physical currency is called fiat, which government issues and can become obsolete, and can be displaced by cryptocurrencies. Question is, does government want to allow? We have in parliament discussions that India will have a digital currency. I am taking India government owned digital currency, which will replace the physical currency which government issues, not private currencies like what Bitcoins have, right? So that is discussion, but the bill has not come because there are many other challenges in regulation. Some present cryptocurrencies can become obsolete, and I will tell you what are the present developments in that. Or the other asset class could be gold, because those of you who are interested in internet, you can see this asteroid mining. Or technology we can lead into gold. If you say asteroid mining on the internet, you will find that could be an asset class. So these are the future asset classes and their impacts. So we are saying online phones which are there, credit cards are becoming replaced by online. All that cryptocurrencies worldwide, digital assets rather than nation specific, because Bitcoin is not nation specific. You can buy a Bitcoin in India. I mean, Bitcoin is you can trade it across the world. The key question is if you have this global currency, what will happen to the government control, and will government wants to give this control? So this is a debate going on all over the place, that such a global currency, should it be there like Bitcoin? And if it is there, what is the role of the government? Because government will lose the control of that. So that's why you will find in India, there was a move, they banned the Bitcoins, and there are many other issues related to this part. So apart from the regulatory part, what is the basis of cryptocurrency? Cryptocurrency is like a digital currency, which is like a wealth-like medium of exchange. So you can buy the goods using cryptocurrency on the crypto exchange. Of course, you cannot do in the open market because it is not allowed in India. But on the crypto exchange, you can buy. And there are many countries, including US, where you can buy the goods and exchange with crypto. Those of you track internet and televisions, Elon Musk, the Tesla owner, has said people can buy the cars now using bitcoins. So, and of course, there are many companies who are saying they are ready to accept bitcoins, but not in India. That is abroad. The value of cryptocurrency is determined by supply and demand. So there are very limited mining of the cryptocurrency is not infinite. Earlier, only miners used to get that currency, and I will come to that particular moment who are the miners. But presently, people are exchanging. That's why currency is in circulation in a larger people. You can see its valuations, and sometimes it is very high. A couple of years back, it dropped. So there are many things happening like a stock market. But this is the currency valuation is a big topic as far as cryptocurrencies is concerned. But Bitcoin is not the only currency which is in circulation. There are many things I mentioned on this slide. And of course, this slide is also, I will give it to the institute so you can use it. But out of which Ethereum may become a dominant cryptocurrency because it has a technology which can solve a lot of these problems which I mentioned in the previous, and it has a lot of developers are working on that. But these are the other currencies which are in the circulation today as compared to other cryptocurrencies. So there is another topic with that which perhaps investment bankers, accountants are very keen on, that initial coin offering, because like this you will find there are these Bitcoin, Ethereum, Carando, Ripple. So these are the different coins came out with in the market, and investor invested in that and they issued those particular coins. So it is a form of a crowdfunding. So it is not, there is no regulation. It is not an IPO. Different types of token. Details out in the white paper, token purchase agreement, token value driven primarily by speculation, lack of regulation. So all of you are familiar with IPO. This is called ICO. But you can see the topics listed. They are very different from an IPO. And whoever is investment banker or accounting, how to do it is a very big issue, because how to do an valuation. And I have also mentioned issues with accounts and auditor with this ICO, because it is a startup. No experience about how this currency can go. There are a lot of data compliance related issues in that. Regulatory issues because it is very weak today. Feasibility of underlying business model, most of the time people are not able to decipher, accountants are not able to decipher, financial wizards are not able to understand. Scope and risk engagement is very different. In India, it is in very nascent stage. I mean, there were some ICOs. There was a fraud in Kerala. You can go on internet and check. Legal framework is missing. Some people invested in search of that gold and lost their all money. But the big problem is, I mean, these are the problems which accountants in general face, the auditors face, what to do and how do you invest or evaluate. There are many other challenges as well, because it is not a currency in the sense of the term which auditors and accounting professions are familiar with. It is not cash or cash equivalent you can show as a cash, because next day the valuation could be very different. Not a financial instrument, not an inventory, probably an intangible asset. So it is a currency but not currency. It is an intangible. So how do you do accounting of all these things? I think as an auditing profession, accounting, there's a big challenge. Perhaps all of you also one day will face based on whichever form you try to adopt the cryptocurrencies. And if government issues legislation, of course it is government monitored, but some of the challenges will exist. That's why the legislation is getting delayed. Verifying existence and ownership, because physical thing you can verify in the books. Increase risk of anti-money laundering, because there is digital and like data leaks, there are possible of currency leak. Post-year review and volatility. Valuations, these are all challenges to the auditors as well. So this is cryptocurrency. It is a digital currency, and it is very different than the currency which we are familiar, which we on accounting, we show bank balance and we show especially the cash on the balance sheet. that particular paradigm will undergo a huge change. Which form, how to evaluate? I mean, there are many researches are going, many thought papers are there. Big fours are working on that. Some of you are also maybe experienced in that. So these are those topics related to that part. I come back to the next asset class called non-fungible tokens. This non-fungible tokens is not a cryptocurrency, but it also has a huge impact on accounting profession. Like dollars and bitcoins are fungible, so you can exchange $100 note with $10 10 rupee notes. Sorry, $10 note, or 500 rupees note with 100 rupees note. So they are fungible, exchangeable, right? But work of art and piece, you cannot fungible because there is only one Mona Lisa worth 1 billion. Okay, reprint is not same as the original one, right? So these are some of the things which are there. These are non-fungible tokens. And in March 2021, there was an auction done. You will get this story on internet, which was of 69 million. Okay, and I will come to that. But when somebody buys this asset, how do you value in your balance sheet? Because 69 million also will not remain the same. It can go up, go down, or perhaps will become zero as well. Okay, and how do you tax? I mean, there are many issues linked with these non-fungible tokens. So NFTs also have many uses. It can be used for concert. It can be used for academic credentials. You can give some top shots. George Bush plans to sell his NFT for his genome. I mean, this is a story on internet. Those of you as interested can also see. NFTs can be used for collateral for these new generation loans as well. Okay, so these are some of the uses of NFT. But accounting challenges of valuation with NFT have become very high. How do you, value an NFT? Like this Bipley sold this NFT for 70 million. This is what the artist, and you can check on the internet, he sold it for 70 million. This high price commanded at the sale, I mean, it is difficult to question. Any CAs, how do you, value it? When it comes to the company balance sheet, how do you represent this particular asset? And there are many, questions, very less answers. And I think all of you will get confronted with these particular questions as we move further in this decade with blockchains and all. So what are the tax implications of NFTs? Generally speaking, NFTs are taxed and treated like a property. But property, we have certain rules, regulations. Here it is very difficult to see how NFTs you can do. That's why in India also there are lots of issues. Government is not allowing on this particular one capital gains, because you can keep it whether how to treat those capital gains. So there are many tax related issues with NFTs as well, which are issued on the blockchain. So you will find all these things which is mentioned. Government is also thinking about Bitcoin of India, not Bitcoin, the digital currency for India. So it is replacement of physical currency by the digital currency, but not Bitcoin. Bitcoin is private. We don't know who owns it, and it is global. But many governments across the world wants to introduce a national digital currency to get rid of that 21,000 currency management issue, which I mentioned. How far they will be successful, how to solve many of the problems mentioned here. Some of them will not be that acute because it is government regulated. So with that, but we'll see. But the key question is what is driving this development, and the name of that technology is blockchain. So just key takeaways. Digital currencies, cryptocurrencies uses a technology called blockchain. There are two types of assets. One is cryptocurrency, another is non-fungible tokens. Non-fungible tokens you can create for your artwork, for your paintings, the case which I mentioned. And these are two asset class. One is currency asset class, digital currency asset class, and another is this other asset class. And all of them use a technology called blockchain. So we'll go further. What is this blockchain technology? A simplified view is all of you are from accounting profession, and ledger and blockchain is called decentralized distributed ledger. So that is why. So that's why it is having a lot of affinity to many of the accounting professionals. So this is the view of the current system. Everything get centralized, and this is the view of the decentralized one. Multiple computers, each one of them decides whether this particular transaction is valid, not valid, and it becomes a distributed, decentralized ledger. No individual can own the records. It is managed by the system, fully automated. Hacking is almost impossible, and there are reasons why this is possible. But the key point is it is distributed ledger owned by majority of the people in the system, not one, and it is distributed. It can be distributed across the locations, across the geographies, based on the type of the blockchain gets implemented. So what are the key uses of blockchain which are related to one is I mentioned digital currency. I think we discussed at length this particular application. There is a record keeping, and I will show you some application of record keeping. Then this securities, I just mentioned the crowdfunding part, which is there. We'll come to this point again as we progress with the session. And there is a very big part called smart contracts, because as I mentioned, currency is one part. As a accounting profession, we deal with recording of that particular transactions, and then whether those transactions are in compliance with the contractual obligations we have, or perhaps our other party has. And these two parts are the biggest one advantages of blockchains, and which can have many issues which I mentioned in my slide, which can address regarding trust, regarding inter-party reconciliations, can be addressed by that. So coming back to the point, what is blockchain and why it is so important? So there are two words. One is called block, another is called chain. So let me come back to the first part. What is block? Block is nothing but you can list out the transaction in the chronological order, and then it generates a computerized, arithmetic number. I mean, there are many algorithms, and I don't think we should go about that. But the key question is, all your transactions, what you have, plus information related to the previous block, it generates a unique identity to the present block. List of transactions, other field, previous block, it generates this, a key to this block, and writes. So every next block has a link to the previous block, and its key and information is related to what is inside the previous block. That's why it is called chaining. So the next block carries information and address of the previous block, and there is a size of this particular blocks. And this is your ledger transactions. I mentioned here, this is your ledger transaction, the way you create normally the ledgers, but they are time stamped. And it is, once the block is written, it is not possible to change. Okay, that is the beauty of this particular thing, because then this particular blocks are available with many people, and it is not possible to change, because if you change something here, then all other blocks become invalidated and other people in the system will reject that block. So changing is almost impossible in that. So key takeaways are two things. One is it is a block of your ledger transactions with some computerized cryptography, and you generate an identity to that block, and that block, like democracy, majority, in democracy we elect by votes MLAs, MPs, like that. This particular block is also selected, saying that all these transactions are right by a democratic way of those computers which I have shown here. Sorry, by this phone here, yes, which block is valid. So it is by 51% majority decides that the valid blocks in the blockchain. So if there are 100 blocks, computer nodes, 51 nodes have to say, yes, this particular block, the way it is written is correct. And that is how everybody starts moving, and everybody agrees the copy of this ledger. So nobody can change it. So two important things, those are the blocks Blocks have a timestamp transactions. They are not possible to change because the copy is with everybody. You cannot go to everybody and say I'm changing it, so change it. It is fully automated with computer, so you cannot change anything in that. So what does it give? It gives trust, and I will also show you some video. It is decentralized structure, improved security and privacy. It reduces cost, because I can say if 21,000, if we can issue a digital currency and we can save 50% of the cost, also I think it will be great saving to Government of India and fund a lot of social security and all those particular projects as well. Speed, immutability, because you cannot change the transactions. So these are some of the benefits of the blockchains. So what I will do now is I will run a summary video of what the blockchain is. Chandit sir, tell me whether you are able to hear properly.
Yes.
You are able to hear me?
Is it a revolution or just...
Okay. Yes.
Yes.
hype? Perhaps something in between? One thing is clear. Blockchain is one of today's big taking points. Experts see a technology that will influence our life, a new phase of the internet. But what is the belief based on? Blockchain is momentarily the best known distributed ledger technology, DLT for short. This is primarily due to the hype surrounding the Bitcoin cryptocurrency, which is based on blockchain technology. DLTs describe digital databases in which every member can supplement the data stored there, not centrally in a cloud, but locally on each computer on the network, functioning as a decentral peer-to-peer network. One of the features, the decentral consensus mechanisms that are implemented through algorithms on the participating computers. This so-called mining verifies the data in the decentral network, makes DLTs transparent, safe, and decentral, and by that, the backbone for future transactions and verification processes. In the case of blockchain, a new digital block with a distinctive signature containing the hash value of the preceding block is written for every new set of information. The members check the new information using a consensus protocol before it is incorporated as a block within the chain and becomes immutable from then on. Proof of work, which is the best known consensus mechanism, uses computing capacity of the members to validate the transactions. This form of mining is very resource intensive due to the laborious computing caused by complex calculations. However, this effort is part of the secure consensus protocol's design and protects the network from being manipulated as it renders attacks uneconomic. At the same time, there are more flexible ways to secure the consensus, such as proof of stake, for use cases where the safety requirements are not as high. In proof of stake, users with more tokens have more power in the consensus finding process. This happens with the assumption that the user has no interest in damaging his token value and his influence by harming the system. If one has significantly higher speed requirements, then one can use DLT for framework contracts and perform the exchange of information by a so-called second layer mechanism. On this second layer, transactions are processed at higher rates. An alternative approach for use cases with higher transaction rate requirements could be making use of the DLT variant Directed Acyclic Graph, DAG. In contrast to blockchain, consensus finding in DAGs is achieved if the user validates for each new transaction at least 2 previously not validated transactions. With every user participating in the network, the transaction rate is increased, at least in theory. However, this advantage of scalability is at a research stage and not yet completely proven in practice. Distributed ledger technologies are highly relevant in the future because they enable an economy of things, safe transactions between humans and machines, immutable, indisputable information, and as a consequence, the capability for smart contracts embedded in a program code to be able to guarantee decentral, automated contractual transactions. Intermediaries will become redundant. Businesses will be decentralized and ultimately be performed between machine and machine. Cars charge themselves, negotiate the prices at the charging station, and settle the bill. In an economy of things, distributed ledger technologies create and ensure the basis for trust, fairness, and participation in the decision-making process. As a result, DLTs enable intersectoral value creating.
So just key takeaways based on the video as well as what I have covered. What is blockchain? It is a record keeping of transaction in the blocks. That is, you can, you are all from accounting profession, so you will know it is a group of transactions. And we write in the manual ledgers, it gets written in this kind of technology. So it is a group of transactions and then they bunch together with timestamp and cryptography. This session is not about cryptography, but it is encryption and public-private keys. So that you take it that it is cryptography requires huge computing power if somebody wants to break in, which this video was showing. So, and they are written. So nobody can change it as soon as you write inside a blockchain. Secondly, the ledger which gets created is available on all the computers participating in the blockchain. So if you want to change anything, that means all the copies we have to change. And this is an automated system. So hacking is almost impossible. Okay. Secondly, third part, the data is managed in large number of computers and so many computers can participate in that. Also, to write a block, 51% of the computers have to agree, saying that yes, this block, all the transactions are valid. I mean, there is a complicated logic behind it, which is automated, and it is also called proof of work and mining. But since this session is only for 1.5 hours, I have not had any content on that, but it is impossible to break 51% majority. Okay. Now consensus that it is chaining and cryptography. So if you create a next block, it has a link with the previous block, so it is not possible to break. So this is how this distributed ledger is created. Blockchain was invented by Satoshi Nakamoto in 2008. Whether he was a person, group of person, I don't think anybody knows that, but he created a Bitcoin. And the first Bitcoin which was used is to buy a pizza in the United States. And that white paper is still there. So these are the takeaways of what is blockchain technology. You can see this is not cryptocurrency. It is a technology which is for record keeping, timestamp record keeping, which you cannot change. It is managed on large cluster of computers. The copy of the ledger is distributed. 51% of the nodes have to agree for writing on that ledger, and it uses cryptography, means encryption and some hashing. That is a computer terms which requires huge power. So once the block is written, it is almost permanent. It cannot be changed. So what are the blockchain uses in various industries? So I will spend some time because some of you will have that, because one use case which I have mentioned happens to be a currency itself. Okay. Now, computerization of land records. If you see, to reduce the information asymmetry, many countries, including India and many other countries, they have this particular land record issue. Andhra Pradesh has initiated a large project on land records. Many of those governments are in the process of initiating this so that, you know, this dispute related to property rights can go. So Right of Information Act, which is available, which also will have this particular access facilitated. Existing challenges in the land records is paper records. Data history is very problematic because you don't know there are gram panchayats, how to go through that. Somebody can tamper the paper, then you will know the ownership gets changed. Then corruption, vulnerability, there are many of those issues. I think all of you are familiar. The technical records is these are all digital records. I'm saying digital records are different than the blockchain records. The blockchain records, the moment you create, they become a permanent records, and nobody can change. So dispute, corruption, and anybody can see who is the owner of a particular property in the country, non-discretionary, and it is a distributed ledger. So this I think I will cover. One of the things which is smart contracts. So I will also run a video on smart contract. Like what we see in our area, especially in the properties, that moment you sell the property, you go through number of milestones, and that property there is a payment on a percentage of completion. I'm talking a very simple property transaction like house buying, and then you will have to pay the money. Sometimes people get cheated because you don't know the progress is not appropriate, nobody is valued. So these kind of now entire contracts can be digitized, and you can release the money only when the milestone is complete. So that is the beauty of the smart contracts. We will also see as we progress to this particular session. Then there are supply chain. This is a huge area, and many of you also knowing the issues in supply chain, because sometimes you don't know from which one. Walmart, the biggest retailer in the world, he also supplies food, and one of his meat supplies in United States got into a real problem because it was poisonous, and there were court cases on that particular thing, and he was not able to trace who are the suppliers of that particular meat block, which created havoc with that. So after that, he implemented blockchain. Walmart implemented a blockchain in full supply chain. So today he has a full transparency from every supplier, every batch, every piece which is coming from which place, what is the date, because it is all timestamped. So there are supply chain things. There is a smart infrastructure there. We can create. Blockchains can play a important role in supply chains. You can see sharing of the information in supply chain is very important. That can happen automatically. Multiple parties are involved in supply chain. There are a lot of suppliers and all. There are a lot of financial transactions. They carry lots of goods are in transit. That issues can be also addressed. That is visible to the public, and you can then trust if there is a record comes. And especially medical, pharmaceutical companies can be of great benefit, which can provide the blockchain solution. So right from planning, forecasting, procurement and manufacturing, execution and operation, asset management, many of those things you can chain it using the supply chain part. Okay. Now I think I will skip. So what the supply chain can give? Most likely product certification, because whether you want to have a proper product, blockchain will answer whether it has a correct brand, whether it is correct technology process, and especially high value, and secondly life threatening medicines which you want to get sure that what exactly you are getting is what you have ordered. I think blockchain will offer many solutions into that. There are many other things today are automated using blockchain with Internet of Things. Perhaps many of you are familiar with Internet of Things. uh, Amazon is a classic case. You will find their entire supply chain. If you order anything on Amazon, he will have a graph saying that when it was picked up, when it was delivered, whether it is in transit, because everything now is recorded and publicly available, and it keep pushing the messages on your mobile as well. A record trail and screen every production and sale, you will see. So traceability is very important, and that you get out of that. Now education sector is another thing which is very important, which was mentioned. You will find many issues in the education sector: assessment, issuing of the certificates, degrees. A lot of frauds take place because people don't know whether it is an accredited institute, whether the degree which I will get is having a blockchain. So there are many things related to digital certificate transcript. A lot of people wants to pursue foreign education. So how do you get this transcript properly? Replace paper because preserving for 30 years, 40 years is a big problem. Accessibility of the records to the educators, students, individual, student views, validation of information because it is available in piecemeal. We don't know whether AICTE is approved, Institute of Chartered Accountants have approved this. I mean, there are many things. So there are many things which are involved in the education sector. So I will also run a small video how education sector thing this is implemented process.
As the government introduces innovative ways to provide education for all, new universities and educational institutions are coming up every day. However, in parallel, diploma mills or unaccredited institutions are also cropping up. Students and their potential employers are the ones who are the most affected by these fake degrees. While the government has taken strict action against such unaccredited institutions, there is a need for a preventive mechanism. Introducing Infosys Blockchain. Meet Priya, who is seeking admission in an alternate medicine stream from a trustworthy college in India. She logs onto a CCIM, Central Council of Indian Medicine sponsored blockchain network using an easy-to-use mobile app and gets trusted information about all accredited institutions offering medical courses and their course and fee structure and syllabi. Priya gradually secures an admission in Munial Institute of Ayurveda Medical Sciences, Manipal. This college is affiliated to the CCIM and the admission letter is updated on the blockchain network by the college itself. During the course of her degree, all her digital mark sheets and certificates are updated by her college on the network. All such documents are notarized by stakeholders on the network itself. These documents will ensure integrity of information as they are immutable, time-stamped and digitally signed by the issuing authorities. Upon completion of the course, Munial College also updates Priya's BAMS degree certificate digitally on the network. Priya goes on to apply for a job at Sanjeevani Hospitals for Ayurvedic medicine in Ahmedabad, where she shares her educational certificates. Sanjeevani Hospitals can now easily validate the accreditation of Munial College and Priya's qualifications as well through the blockchain network. The blockchain network removes all middlemen and makes employee background verification quick and efficient.
So one of the key parts you have seen that these are all information related records which we create. But as I mentioned in the beginning, that we have a very big thing, especially in the organization and many of the corporates are contracting. And contracting is between two parties. The transaction happens between the two parties for goods, services, whether either you procure or provide. And based on the contract, you give a consideration, a value gets transferred, either you pay or the customer pays you. And this issue starts getting complicated as you go away from your trust factor. If you decide to do in a different state, how do you trust by phone, by way? If you want to go to international, then of course there are international trade. Many things are evolved over a period of last 100 years. Letters of credits, letters of guarantees, which are there, that is established via banks, which charges huge amount of money as a commission. There is also another thing which is related to Indian diaspora who wants to do remittances. And to get remittances from wherever, I mean, people go abroad and then they send money back. There is a huge portion goes as a commission. And there was a study done that if $100 is remitted from US, the beneficiary receives only $72. So the $28 lost in the transaction fees in between. and this was to an sub-Saharan Africa part, and that takes 45 days. So you can see the complication in this kind of money transactions. So blockchain also got enhanced in last 2 years. That how do you have a contract encoded on the blockchain so that when certain conditions are satisfied, the parties' obligations can be executed on the blockchain itself. Most interesting part is that the contract itself is written in the blockchain. You cannot change it, and as soon as the conditions are met, you cannot stop the either party's consideration. And this is the reason why blockchains have become very popular in a trade area. Okay. Apart from that, as I said, money transactions, it has become. So smart contracts are digital contracts stored on the blockchain, and they get executed automatically. So you cannot say now you can execute. Just for those of you who feel this is very intimidated, but those of you use delivery app, there is these days most of the e-commerce, whenever you order, the gentleman comes to your door and says, "Sab OTP de do." That means you are confirming to party the moment you give an OTP that you have received the goods. Now the question is, this particular transaction which I have taken, you give an OTP to that person who is delivering you whatever package is, you are confirming that you have received. That is a receipt that you have received the goods. And this is working today because most of the time, except in certain cases, it is prepaid. That means you have, along with the order, you have prepaid, and implicitly you are trusting that e-commerce site that he will deliver. This is the trust which is established, but the transactions could be smaller, and trust factor is based on person to person, site to site. Like Amazon has established the trust because if you decide to cancel the order, they will not ask the question and do a refund. Maybe how many people have cancelled the order, minuscule, and they have taken a risk and established that trust. But businesses, B2B businesses, requires a different kind of trust mechanism. And this is not the way this delivery works. But like this letter of credit, can I execute the contract as soon as a receipt of goods, there will be a receipt, and then I can get my payments internationally. These contracts can be coded on the blockchain. It cannot be changed because once you place the order and put it on the blockchain, it cannot be changed. It is like a contract execution automated. That is what can happen on the blockchain. So I will run again a video to illustrate this particular point. So what is the smart contract and how it can be simply explained to you?
Smart contracts are very popular nowadays, but what are they and what problems do they solve? The term smart contract was first used by Nick Szabo in 1997, long before Bitcoin was created. He is a computer scientist, law scholar, and cryptographer, so I'll spare you his exact words. But in simple terms, he wanted to use a distributed ledger to store contracts. Now, smart contracts are just like contracts in the real world. The only difference is that they are completely digital. In fact, a smart contract is actually a tiny computer program that is stored inside of a blockchain. Let's take a look at an example to understand how smart contracts work. You probably are familiar with Kickstarter, the large fundraising platform. Product teams can go to Kickstarter, create a project, set a funding goal, and start collecting money from others who believe in the idea. Kickstarter is essentially a third party that sits in between product teams and supporters. This means that both of them need to trust Kickstarter to handle their money correctly. If the project gets successfully funded, the project team expects Kickstarter to give them their money. On the other hand, supporters want their money to go to the project if it was funded, or to get a refund when it hasn't reached its goals. Both the product team and its supporters have to trust Kickstarter. But with smart contracts, we can build a similar system that doesn't require a third party like Kickstarter. So let's create a smart contract for this. We can program the smart contract so that it holds all the received funds until a certain goal is reached. The supporters of a project can now choose the smart contract. If the project gets fully funded, the contract automatically passes the money to the creator of the project. And if the project fails to meet these goals, then the money automatically goes back to the supporters. Pretty awesome, right? And because smart contracts are stored inside a blockchain, everything is completely distributed. With this technique, no one is in control of the money. But wait a minute, why should we trust a smart contract? Well, because smart contracts are stored on a blockchain, they inherit some interesting properties. They are immutable and they are distributed. Being immutable means that once a smart contract is created, it can never be changed again. So no one can go behind your back and tamper with the code of your contract. And being distributed means that the output of your contract is validated by everyone on the network. So a single person cannot force the contract to release the funds because other people on the network will spot this attempt and mark it as invalid. Tampering with smart contracts becomes almost impossible. Smart contracts can be applied to many different things, not just on crowdfunding. Banks, for example, could use it to issue loans or to offer automatic payments. Insurance companies could use it to process certain claims, and postal companies could use it for payment on delivery, and so on and so on. So now you might wonder, where and how can I use smart contracts? Well, right now there are a handful of blockchains who support smart contracts, but the biggest one is Ethereum. It was specifically created and designed to support smart contracts. Smart contracts can be programmed in a special programming language called Solidity. This language was specifically created for Ethereum and uses a syntax that resembles JavaScript. It's also worth noting that Bitcoin also has support for smart contracts, although it's a lot more limited compared to Ethereum. So now you know what smart contracts are and what problems they solve.
So you see, now if you take this particular thing what we are discussed, we discussed cryptocurrency. So you will have a digital currency. You have a contract established on the blockchain. You can create your tokens if you are in a business of media, artists, art creation. So you can create your assets. You can also trade across the states. You can do an entire thing could be available without tampering. Okay. So all these things, if you take, you have now a digital currency, whether a government regulation, whenever they do, it will come. But if you have all these things, what it means for accounting profession is a very important thing I want all of you to think. Okay. So I am releasing one more video so that the monotony gets broken.
I see blockchain technology impacting the accountancy profession in a number of ways. The first of which is because blockchains are mostly immutable, we're going to see records and the ability to make sure that records have not been changed, that they have not been forged, and there is going to be an increase in the trust of accounting systems, because you can always look back and you can see what the state of a certain ledger or account was using a blockchain-based system. You have the ability to take a record and then create a record of that record that can't be undone. So in terms of immutability, that is a very big area where it will affect the accounting industry. We're seeing the development of something called triple entry accounting, where you have the two sides of the book, and then what you do is that you put that into a blockchain-based system, making sure that it can't change. The other is in the form of attestation and verifying that something is done in a certain way. So you have the ability to program conditions into smart contracts that run on top of blockchains, and these smart contracts can validate information. They can send money in different directions based on the parameters that you've put in there. So The third area that I would see this is in the form of transparency. With public companies, we can have real-time access into the current state of the accounts. And I think that eventually we're going to get to a point where public companies that are not providing this level of transparency are going to have a discount on their value in the marketplace. So immutability, attestation, transparency are areas that I think blockchain technology will affect the accounting industry.
So he mentioned very interesting in triple entry bookkeeping. And I really want to clarify here that there is no additional entry. So don't get this particular thing. And there is a big discussion in the public domain about this triple entry accounting. But double entry has one side credit and other side debit. I think it will continue. What this triple entry bookkeeping really means, that this entire record keeping moves on the blockchain, so that nobody can tamper. The issues related to misrepresentation, issues related to manual errors, and issues related to manipulation can get away, because you will move this ledger keeping on blockchains. Okay, and then of course there will be a change of how do you audit, how do you do accounting, really whether the accountant should do only the legal part, or is he do a management related accounting. So there is no third entry per se, but this entire recording is moved onto the blockchain. So those of you who have seen the triple entry, it is misleading. It means it is really the record keeping of debits and credits moving on the blockchain, and this is what they say is the triple entry. But just to make sure that you don't go away with a takeaway that there is another I will run another video of this triple entry thing to demystify.
One of the greatest innovations made possible with the advent of blockchain technology is the development of what we call triple entry accounting. Triple entry accounting is a term for a new method of accounting that was proposed in the 1980s. It was most recently popularized by Ian Grigg, associated with blockchain technology. Triple entry accounting is an enhancement to the traditional double entry system, in which all accounting entries involving outside parties are cryptographically sealed and linked through a smart contract to a third entity. But to understand the value of this, we need to appreciate a little bit the history of accounting systems. There is evidence that even during the Mesopotamian era, some 4,000 or 5,000 years ago, a fairly complex accounting of property, purchases and expenditures existed on tablets. Extensive accounting methods also existed in Greece since the 5th century BC. By the Middle Ages, a fairly advanced system of accounting had developed, but before the advent of double entry accounting, accountants relied on a chart of balance sheet accounts to record financial transactions. This single entry accounting system is a method of bookkeeping relying on a one-sided accounting entry to maintain financial information. This creates a system that is very difficult to examine for accountability. Consider the extreme problems such a system would pose today. Companies would publish balance sheets without income statements. There would be no way for investors to scrutinize the changes in equity. With a single entry system, all you have to do is remove a line in the ledger and that money no longer exists. There was no way to verify, no way to audit, no way to reconcile, for people to agree. Likewise, it would be nearly impossible to build a single entry system that by itself supports the reporting needs of public corporations, companies that sell shares of stock to the public. The development of double entry accounting opened the realm of accounting into a whole new world. Double entry bookkeeping revolutionized the field of financial accounting during the Renaissance period some 600 years ago. By the 1400s, a Franciscan friar finally codified the double entry system, and it swiftly became the standard for the merchants of the Italian states. Whereas simple ledgers had long been the standard for record keeping for merchants, the church and state treasury, the growth of long-distance trade and the creation of the first joint stock companies resulted in firms whose records were too large and complicated to provide an assurance of accuracy to their users. Modern financial accounting is based on a double-entry system. Described simply, double-entry bookkeeping allows for firms to maintain records that reflect what the firm owns and owes, and also what the firm has earned and spent over any given period of time. The idea is that you want to minimize the errors in your bookkeeping, so that for each transaction you do, you enter 2 entries into your book. The issue with double-entry accounting is that there is not really any connection between the different sets of books each firm holds. The records are themselves separate. So if Bob wants to cheat a bit, he can say that maybe his transaction was only 8 tokens and he doesn't have to pay as much taxes. Likewise, as the organizational structure and sophistication of companies developed, they were expected to share their records with outside stakeholders, such as investors, lenders, and the state. This created the problem of how outsiders could trust the company's books and thus required auditors. Although you did your double-entry accounting in your book, there was absolutely no guarantee that the bank or whoever else you were dealing with saw the transaction the same way and recorded the same numbers. In fact, as part of an audit, one would have to write to the bank and ask, did this organization really have this money at this date, and do you agree on this number? So what we now see is that a massive amount of administration could be removed if we had an economy-wide accounting system. Triple-entry accounting can be thought of as a way of agreeing on objective economic reality. Triple-entry accounting is an enhancement to the traditional double-entry system, in which all accounting entries involving outside parties are cryptographically sealed by a third entity. Thus placed side by side, the bookkeeping entries of both parties to a given transaction are congruent. The third entry in the system, entered into the blockchain, is both a receipt and a transaction. It's proof that something happened between 2 parties, which goes beyond the receipts that each party holds in the double-entry system. Since the entries are distributed and cryptographically sealed, falsifying them or destroying them to conceal activity is practically impossible. A seller books a debit to account for cash received, while a buyer books a credit for cash spent in the same transaction, but in separate sets of accounting records. And this is where the blockchain comes in. Instead of these entries being recorded separately in independent sets of ledgers, they occur in the form of a transaction between wallet addresses in the same distributed public ledger, creating an interlocking system of permanent and objective account records. The idea about triple-entry accounting is that instead of each firm having their own books, the transaction goes through a contract, and this contract includes everything about that transaction. This may record what the product was, the prices, who is the seller, who is the buyer. It's digitally signed, and it can have a hash that links to a further public document. So the books are now linked together by this third entry, the triple entry, that can potentially be viewed for external audit purposes. Triple entry is quite a confusing term because we're not creating a third entry, we're just linking 2 separate double entries. The link is created via a smart contract that works to ensure that the 2 double entries in separate legal entities are always the same. This is auto-enforced by the smart contract, and as with all smart contracts, it is tamper-proof. The advantages of a triple-entry system are numerous in terms of reconciliation, transparency, trust, and auditing. Triple-entry accounting allows us to reconcile the balance, the transaction, and the reporting process so that organizations can trust their own books. Typically, each party is responsible for maintaining their own financial records. However, this can lead to fraud or other errors. The use of triple-entry accounting reduces this risk by creating a non-biased record. Many blockchains are publicly viewable or easily exposed to external viewing, making them transparent. With blockchain networks, the entry is the transaction because the assets are on the blockchain. The ledger is not an account of what happened, it is literally what happened, and as the ledger is tamper-proof, this makes it highly trustworthy. For auditing, blockchain accounting is ideal as it creates a list of transactions. Thus it creates an immutable history of all the exchanges within the system, which could be mined using data analytics. There is thus a perfect audit trail.
So just to key takeaway from this particular video, that you will find on the internet many discussion on triple entry. There is no additional entry except that your double entry accounting system, the records are taken on the blockchain and they are immutable, and those things you cannot change. So you can do an auditing, disputes will go down, transparency will increase. That is what this thing, but the word is perhaps a bit misleading, so I try to clarify that. So looking at this particular initiative, Indian government has taken many initiatives. The first thing I mentioned, that government has announced that we want to become a 1 trillion digital economy by 2025 out of the 5 trillion economy goal which Prime Minister has set. In the digital economy, one part of the payments, I think we have done considerable progress as compared to many nations in the world. We are very advanced with Digital India. There are many initiatives which are taken in healthcare sector. You can see the COVID vaccine. So those of you who are familiar, government of Maharashtra and many governments have issued travel passes. But be aware that that travel pass, behind that there is a blockchain. Okay. So Digital India has many initiatives on the blockchain. Our Prime Minister was in the IITs. They have started initiatives related to issuing of the degrees. So over a period of time, blockchain oriented degrees will start in the country to remove this disparity and frauds. I'm quite sure many of the initiatives which I mentioned in the slide also will come with the Chartered Accountant Institute and many regulation. So you will fancy that the IIT Kharagpur this particular part that there was a think tank which went through that how do we use blockchain for the India, what is our strategy. There is a strategy paper you can see here. The new IT minister has unveiled the strategy paper which has profound implications also on financial sector, because it is not only audit and accounting, because I put a focus because this audience is that, but there is very big development on fintech and regulators on the blockchains as well. And there are many. Hello. Okay. Maharashtra government has taken a initiative, and within the government of Maharashtra, they will start issuing blockchain degrees. All the universities have been directed to use the blockchain. I have already mentioned that government of Andhra Pradesh has started land records. There are many one. Those of you interested also can see on the internet. So many initiatives have been taken. So before I go for my conclusion, I will just summarize what that things which we have covered. We started first and saying that what is power of connectivity and what economic progress it fuels. I cover the history lessons from Ottoman Empire to British Empire, and you saw that was all underlying factor which created progress happens to be the connectivity. We have a profound revolution of data connectivity now. 60% of the world population getting connected, and we still have intermediary for doing international remittances. I think this asymmetry has to go if we have to progress, and that asymmetry, the solution lies internet of value. So how do we, because we have done for last 15 years of this internet revolution, we are able to do many things which perhaps was difficult. As I told you, when the first space shuttle took man on the moon, the Neil Armstrong took 3 photographs. That is the museum. Those of you who have searched internet, 3 photographs, and they were celebrated. Now you take every person in the country must be taking at least 10 to 15 selfies in a day. That is a profound change which has happened. But what has not happened with related to how do you transfer the value? And I think blockchain, as we move further in this decade, blockchain will have a huge impact on the society, government, finance, accounting, and all. So for a conclusion, I will run this video that what will be the shape of the future of accounting using on the blockchain. And this was the TEDx video. So you can take away what will be the future which is coming.
As thousands of years have passed, industry-disrupting innovations have continued to alter how business is conducted. From paper to stone tablets and from computers to the cloud, the accounting profession has continued to stand the test of time as a way to protect investors of a company. After learning in school and on the job that there was no possible way to assess all information of a company that goes into their financial statements, I set out to find an alternative using an emerging technology called blockchain. For those of you that may have heard of blockchain, you've probably heard the buzzwords mining, hash, encryption, and so on. And you may even think that miners are a group of people taking a pickaxe to some online cloud in the sky. To understand blockchain, you can think of a rock climber scaling the side of a mountain. Each move they make is meticulously calculated, and before they stick their next pick into the side of the mountain, their entire being is working to solve their move. After executing that move, they then move on to solve the next. Blockchain operates under a similar premise. When data is being added to the blockchain, a network of miners is working to solve a complex, rigorous equation to encrypt data onto the chain. The entire network works to solve this equation, and after solving it, moves to the next. As data is added onto the blockchain, it can then be aggregated to form a traceable ledger that is autonomous, unchangeable, and practically impenetrable from cyber threats. When a resident smart contract is used in conjunction with blockchain, the result is an agreement written in code that only executes when terms of the contract have been met. After execution, the contract is then recorded on the blockchain without any ability for human interaction once the contract is set in motion. Now, seeing the promise of these two technologies, many companies have taken to developing applications for their operations, such as tracking inventory or the exchange of money for goods and services. But rather than tracking tangible items, what if blockchain technology could be used to help maintain accountability for the financial information that companies are providing to investors? Enron and WorldCom are two companies alone that caused $250 billion of investor losses. These were not incidental losses, however. These losses stemmed from management decisions to fraudulently manipulate the financial information being provided to investors. They did this to help reach their earnings targets and receive their bonuses. Now, not all frauds are this large, but frauds similar to this do happen frequently, affecting everyday investors. And that is why the SEC has settled billions of dollars of fines for errors and fraud in financial reporting. In order to safeguard these investor interests, many large companies use ERP systems that aggregate the data, the accounting information, as it flows onto the company's books. The problem with these systems, however, such as in WorldCom and Enron, is that they can be susceptible to those with proper clearance and access who want to manipulate, override, and potentially hack into the financial data being aggregated. the use of blockchain technology can help companies improve the integrity of their financial information. As seen in some of the largest scandals, when accuracy dwindles, investor confidence is lost. And for that reason, it is essential to have increased monitoring and transparency over how companies adapt generally accepted accounting principles in their everyday. To safeguard these investor interests, the accounting profession must adapt to an ever-changing world of goods and services. The problem being that as companies continually adapt, current systems tend to lag behind. For example, in the past, many companies could recognize a sale of revenue each time a sale is made. But now, software companies specifically can't recognize all revenue in the event of a purchase, only when a service is actually provided. And so if a software company sells a product to a customer that includes 3 updates over its lifespan, there will be 4 instances of revenue gain. Once, when the base product is downloaded by the customer, and each time a subsequent update is released. This increased intricacy of recognizing revenue has started to outgrow some of the current systems in place, such as ERP systems. Now, companies need to keep track of a sale of their product, as well as each obligation that is held within the product. To solve this problem, I propose a framework that utilizes blockchain technology as the trigger for recording financial information onto a blockchain ledger. Consider the use of blockchain technology to help recognize the revenue from a service. Only after the service is provided would a smart contract trigger the recognition of that revenue onto the blockchain ledger. First, management would be required to break out each obligation or service held within a sale of a product. Then, each obligation, such as a software update, would be coded into their own smart contract that would only execute when the service is actually provided. So, if a company sells a product to a customer and they download that product, a smart contract would trigger the recognition of the amount of revenue tied to that product onto the blockchain ledger. Then if an update was downloaded, let's say a month later, a smart contract would then trigger the recognition directly tied to that revenue and that update onto the blockchain ledger. At that point, the company and its investors would be able to see exactly how much revenue they have truly earned from providing their services. Now, one instance of a transaction may seem insignificant, but imagine thousands of transactions being aggregated. Blockchain technology has the potential to completely revolutionize how companies collect and present their financial information. You can think of it like this. Imagine taking a unicycle to work every day. It can be done, but you would much rather upgrade to that nice and fast car to go to work. This framework is similar. An ERP system can hold data, but that data takes much more effort on behalf of an auditor to work to verify. Blockchain technology can revolutionize how companies aggregate their data autonomously, making an auditor's job more efficient. Part of that auditor's job is testing the data for existence and completeness. And this can be done by sampling the data and verifying that sample, by sending letters to customers to confirm their balances, among other methods of accounting research. Blockchain technology has the ability to shift an auditor's role from utilizing a reactive approach to a proactive methodology. Rather than spending time verifying transactions because they don't currently have a way to tie all of their financial data to verified transactions, an auditor would discuss management judgments before it is even written into a smart contract code. Management would first discuss their judgments and estimates with auditors to ensure that they completely adhere to generally accepted accounting principles. Only after an auditor's sign-off would the obligation or their judgments be written into a smart contract to execute blanket treatment across all transactions without any human intervention. This technology can be implemented in today's small businesses and tech startups alike. But as the technology becomes more efficient, blockchain will show its value as a way for companies to increase and maintain accountability over their financial statements. I envision a future where all companies can click to create financial statements in real time with integrity. I envision a future where the line between tech and finance is blurred, where auditors are not just accountants, but analytical innovators. And I see a future where specialized professions, such as accounting, can rise up through the use of blockchain technology. Thank you.
So this is where I think I would like to stop if there are questions, because I think I covered many facets of the blockchain and its impact on the society, different sectors, and towards the end on the accounting profession as well. So Parashi, back to you if there are any questions on that.
There are questions like what is crypto mining? What is the process of mining? And is this legal?
Okay, so what is the process of mining? So what the particular blockchain technology is requiring, there are miners who are on the network, which you have seen, who there is a encryption puzzle given. So, and there are many people who try to solve that puzzle by taking the transactions, hashing them. I mean, there are technical words, but there is a puzzle saying that these transactions with that puzzle, how do you solve? And that is called cryptography. I mean, there is some technical word. I don't want to confuse the people. And those miners get a reward in Bitcoin. In early days of Bitcoin, the only ownership of Bitcoins were with those miners. When miners started selling those Bitcoins, they came in the market, right? So the miners are the ones who validate that block of transactions and allow them to write on the blockchain. I think that is what you should think as a miner.
Okay. And so the question is, if without reconciliation, how can you satisfy yourself and certify that figures show that two ends of a business concern are correct and acceptable?
See, that's what I said. If you see during the session, there was a discussion on the triple entry bookkeeping, out of which two entries which you are doing. Now, what it is getting said, that particular accounting system you move to the blockchain, so that both the sides, like Paras and Milind Kamath, in the books of Paras and Milind Kamath, both are on the blockchain, which is centralized. So there is no question of reconciliation because it is publicly written that I owe you 10 rupees and I gave you 10 rupees. So there is no reconciliation. It is publicly written. Everybody can see it.
Okay. Sir, the question is, when government wants to issue its own cryptocurrency, it is still centralized since regulated by government. Doesn't this fail the basic purpose of blockchain to be decentralized?
No. See, the question is, Chartered Accountant Institute can also float a cryptocurrency, but that is a currency owned by Chartered Accountant Institute of India. What is the purpose of issuing a cryptocurrency by the government? Their objective is not to have this speculation like Bitcoin. Okay, today their objective is, there is a huge 25,000 crores annually I spend on managing my currency. You know that I have shown you that particular slide. So can I reduce it by 50%? Okay, that is number one. Number two, blockchain technology is decentralized. So government will not have the digital currency. That entire principles what are mentioned, they will be decentralized. But the owner of that blockchain happens to be the government, so that, because it is a national currency, except that it is a national digital currency which will repel the paper form. That is the objective of that. Bitcoin is like an investment. There are many issues with the Bitcoin. That is not what government wants to do.
Okay. And sir, does Bitcoin technology reduces the importance of accounting, particularly audit profession?
No, see, Bitcoin is a technology in the private domain.
Blockchain.
Blockchain. These are early days yet, and there will be a different role of our auditors. If you have seen and heard my video, the last video, that
Mm,
how to write a smart contracts, and they will have to audit those contracts.
mm,
Right now, the outcome is audited of
mm,
everything, whether it is for the materiality,
mm.
correctness, samples. So the role will go change the way you create upstream those contracts and all, whether there are flaws. So skills will change, but auditors still will be required. But in that entire system of blockchain which gets created, it will get worked on.
Like sir, government has taken so many initiatives. There is a question in my mind also, and there is a question also. Like triple entry accounting is why it is not used in GST reconciliation.
No, presently government has not floated a blockchain. Okay, it is not a
Okay.
public blockchain. I
Mm-hmm.
think over a period of time, it will not be easy today to move GST on a blockchain. They will eventually, it will go, but I think the GST platform today, which is digitized, let me put it
Mm-hmm.
the word digitized, itself
Mm-hmm.
has a challenge because there is a matching credits required, and that itself has taken a huge toll. As soon as it stabilizes, I think government will take an initiative. How do you move towards a wider that? It will take some time, and there is a huge investment required for a nationwide blockchain for GST.
Okay. Sir, can this technology be used in small business?
See, the technological purpose is not small or large. It is for inter-party, right?
Mm-hmm.
So
Mm-hmm.
if you say MSME as a sector wants to implement a blockchain so that their overhead is not, it is yes. But if you say as a firm I want to myself introduce, I don't know the value of that. Except
Value
that
of
you
that.
will burn a lot of things. Because as I said, it is that transaction contract which we do with the parties which will have
Mm-hmm.
largest value.
Mm-hmm. Sir, what about the privacy of data? If the data is shared, publicly.
So there are a lot of procedure. I did not go into the detail. It is
Okay.
publicly does not mean that Paras has an access to that data. He will see. Other people
Mm-hmm.
may not see, or whatever data good, it could be an encrypted. There are many different levels of policies are possible. I did not cover for the want of time today.
It's like I think it's like the banking personnel has a main data of the
Correct. Like
not
all
everyone
our
has.
savings
Yeah.
account, they can see, but
Yes.
most
Yes.
of the time it was an encrypted format. They may not able to see, or they will
Yeah.
get a key and then they will able to do. There are many checks possible, and technology is evolving. Okay, so it is not publicly means everybody's data everybody will see. It will have an
Mm-hmm.
access and permissions, and there are permissions blockchain, permissionless blockchain. So there are many other topics on that, which
Mm-hmm.
for want of time today I did not cover.
Okay. So the question is, how is immutability in blockchain assured? Just as there are vices, vulnerability, why can't blockchain be broken or protected?
Yeah, to add a, if you remember and the presentation which I made, first thing is you will have to create a block, right? The system creates a block. And
Mm-hmm.
to create a block, that has to be validated by 51% majority of the nodes, saying that what you are writing, all the nodes have to agree. And many of those nodes are those miners which you mentioned previously, which
Mm-hmm.
requires huge computing power by which they
Mm-hmm.
solve that puzzle,
Mm-hmm.
right? So, and if you change anything in that, all the previous blocks gets invalidated, so immediately people will shout. So it is an open system.
Open
If you know
system.
everybody is seeing it, can you do a theft there? Because there are 50 people will get up and catch you.
Hmm. मतलब more than 50%, like that. That is why they have
Yes,
mentioned 51%. Na?
51%. So 51% majority, it is in technical terms, 51% majority is required to write a block.
Okay, sir. Sir, is there any company globally which is using this bookkeeping, three accounting?
No, there are many companies which have shifted in US on the blockchain based accounting. Let me not get and confuse people with triple entry and all. Let me call it as in the simplest term, blockchain-based accounting. That is much better because this is in public domain. I used to clarify the doubt. But there is no third entry in this. It is that the ledger keeping between the parties at a center place called centralized distributed ledger. So you keep it rather than having a polluted discussion of another entry. There is no third entry there.
Okay. Sir, is there any specific requirement for computer hardware or it's like cloud?
As far as the actual user nodes are concerned, they can be normal nodes, but the mining requires huge power. I mean, it's a phenomenal power. If you want to become a miner, I think you will require a farm of computers and all. But normal thing which as a user, I think computers will work.
Okay, sir. And sir, will there be any different tax implication for blockchain transaction in India?
It is a function of the transaction. I don't think it is a blockchain transaction. It is related to crypto assets. If you see, I made a distinction between blockchain and crypto assets, and there are two types of crypto assets. One is cryptocurrency and non-fungible assets.
Yes, sir.
Okay, so these two will have a different kind of, if you say cryptocurrency, for example, Bitcoin, and it gets legalized in India, then if you acquire a Bitcoin, then you are acquiring an asset, right? How to do a capital gains tax on that could be a big topic. Okay.
Yes, sir. Sir, what courses would you recommend to get more knowledge on it, and whether any data analytics or mining course is relevant for us?
See, there are, first of all, blockchain related thing. There is an introduction of blockchain, and there are specialized courses related to accounting, finance professionals on the blockchain, because it is the most significant impact it has. So introductory courses are better, and then of course based on the interest, whether you want to have a startup, whether you want to use it in auditing profession, whichever you can take advanced courses. Of course, if you are in auditing profession, analytics is mandatory because you can do many interesting auditing things required. So that is the level which I will recommend.
Thanks a lot, sir. So these are the questions. I am concluding this like the first thing you have said, that cryptocurrency is not a blockchain. Blockchain is used in cryptocurrency. This is the main thing. There is no confusion between this, because nowadays cryptocurrency is the main hot topic in the India also, because government has not opposing the ads which are coming on the televisions related to this, how to buy, how to sell, within a minute you can buy. So there is a confusion. I think users have a confusion between this, but in the first 5 minutes only you have differentiated this. So that's very good. Thanks a lot, sir. Thanks a lot. Now I welcome Deepak Kapoorji for the special vote of thanks to you and the all of us. Up to you, Deepak.
Thank you very much, Parasji. Thank you, Milan sir. Thank you very much. काफी wonderful session है, और naturally कहीं ना due to इस COVID pandemic से इन webinar के through हम कहीं ना कहीं update ज़्यादा हो रहे हैं members in comparison to physical program.
Right.
Thank you, sir. Thank you very much.
My pleasure, because I enjoy, delivering that time. This is my, I think, the second session at CA, one on blockchain.
Sir, we are the one is the lucky Canal branch also.
No, every time I learn, because I prepare based on many people ask me, some are in supply chain, some are in accounting, some are auditing. So then I keep, learning, because this is all a learning for me as well.
Thank you, sir. Thank you very much. Thank you all the participants, and special thanks to Committee for Management Accounting sir, जो उन्होंने कराल ब्रांच को इस प्रोग्राम को होस्ट करने का मौका दिया, and thanks to Paras, and thanks to you again sir. Thank you Nanda sir also.
Thank you Deepak sir. Thank you
Gyanendra ji.
Thanks sir.
Gyanendra ji. ठीक है सर, कंक्लूड करते हैं.
ठीक है सर. Thanks a lot sir.
Thank you.
Thank you Milind sir. Thank you Deepak sir. Thanks for giving us the opportunity. Thank you sir. Thank you.